But if you go to most people and say, hey, since the new millennium started for the last 25 years, what's been the best performing? Oh, stocks. They've been killing it. Maybe bonds. You hear the average person say gold. Gold has outperformed both stocks and bonds from January 1st, 2000 till now, partly because of what's happening with BRICS and the fact that one day, with all this debt in the world, there's going to have to be some sort of restructuring, and that gold proved to be worthy for something like that for a couple thousand years. And when we began this year, I even said I still believing that 3,000 was coming, but I thought, the first few months may be a little quiet in gold.
Gold has been on a relentless upward trajectory, surging from $2,740 to $2,870 in just the past 7 days, a 4.8% gain or a $130 increase. As investors flock to the safe haven asset amid escalating trade wars, record central bank gold purchases, and unprecedented exchange delivery volumes, the key question remains: can gold break through the $3,000 per ounce mark before the month ends? Peter Grandich has maintained his $3,000 gold price target, but initially anticipated a quieter start to the year. However, that quickly changed, mainly due to the influence of former President Trump. Central banks have aggressively accumulated gold, acknowledging that a day of reckoning is inevitable. Additionally, some of Trump's actions have intensified the two most bullish drivers for gold, factors Grandich has highlighted for years. The escalating tariff war between the U.S. and China has intensified, with both nations imposing new import restrictions, fueling concerns of prolonged economic strain. In response, China has been aggressively bolstering its gold reserves. In December 2024, the People's Bank of China, PBOC, added another 10 tons of gold, increasing its official holdings to 2,280. This marks the second consecutive month of substantial gold purchases, a trend likely to persist as China continues its efforts to reduce reliance on the US dollar. While $3,000 is not a strict technical resistance level, Grandich believes it would be healthier for gold to reach that milestone after a brief pullback rather than in an overbought state. Given the current momentum, all eyes are on whether gold can sustain its rally and breach this key psychological level before the month concludes. Join us as we dive into the video for a deeper look. Don't forget to subscribe and click the bell icon to stay informed about our latest updates.
And that was that I actually thought through the end of 2024, gold would actually outperform both stocks and bonds. Some people bought the stocks part. They just couldn't imagine how could it beat bonds. Bonds are always the safe investment. Well, bonds up having two, they're in the third year. Losses at this point in time. And when we began this year, I even said I still believing that 3,000 was coming, but I thought, the first few months may be a little quiet in gold, but that changed. And it changed a lot because of Trump. So as much as you say that it was a short period, a few days of profit taking, some of the actions of Trump have led to the two things that that I've spoken about these last few years, which are the two single most bullish factors for gold. One, central banks are acquiring it like there's no tomorrow. And I believe because they recognize a day of reckoning will come, partly because of what's happening with BRICS and the fact that one day, with all this debt in the world, there's going to have to be some sort of restructuring, and that gold proved to be worthy for something like that for a couple thousand years. And they weren't buying into the crypto nuts that somehow it's a real relic and crypto is going to save the day. So central banks have been extremely aggressive buyers. But the other part that you and I spoke about, which is now playing out, is I mentioned to you several times how the movement of physical trading from London and New York, which some of us like to call the Crimex, not the Comex, and to Asia was going to seriously impair the paper hangers who tend to play the short side aggressively in the paper market in gold out of London and New York. And when we did have those one day down $30, $35, I would get online and tell everybody, listen, it doesn't last like it used to. Probably as early as tomorrow or no more than a few days from now, we'll be back above wherever they sold it from. And that's what's happened. And now the tariff situation, where really concerns of potentially making deliveries came into effect, it was the 1-2 punch. And it really radically changed now this game. Because irregardless of how they try to fix it or whatever, the old games are gone. They're not going to be able to play it in that way anymore. And I think a real physical market will dominate over the paper market. And that's nothing that we've seen for the 40 years that I've been in this business, but that is a huge change that's occurring. So those are the two things. Now, as you and I speak here on this Friday before the Super Bowl weekend, we are overextended. And we could still rally right to 3,000. But if you're someone that's looking for a much higher number, it would actually better now that if it just takes a little breather, corrects a little, 2 to 5% type corrections are okay in this type of bull run. And 3,000 is just a round number. It's not a number that should offer, some special type of resistance, but it'd be better that we go through it when we're not as deeply overbought as we are now.
Bitcoin struggles to sustain momentum as gold surges, remaining well below its all-time high of $109,000. Recent volatility, driven by economic and political uncertainty, has further weighed on the cryptocurrency. Expectations that a second Trump presidency would act as a catalyst for Bitcoin have yet to materialize. Despite increasing institutional adoption, Bitcoin has failed to establish itself as a reliable hedge in times of crisis. Meanwhile, gold proves its resilience, solidifying its role as the ultimate safe haven asset. With the ongoing trade war prompting investors to seek stability, gold has emerged as the clear winner. According to Peter Grandich, central banks are not purchasing gold for speculative purposes. They're not buying it for a trade. Who will they sell it to? They're buying it because it will be used for something far more significant, he explained. While Grandich doesn't entirely dismiss cryptocurrencies, he believes Bitcoin's rise is primarily driven by hype rather than intrinsic value. Gold has been called a relic and ridiculed for years, yet it continues to defy the so-called experts, he concluded. Now let's redirect our attention to a video.
If we are to get to 3,000 and go above it, one of the issues earlier on in this move was the premiums were so high that to buy physical bullion, people were not buying it because by the time if they bought it and sold it, they almost had to have the gold price double, which was just not incentive to buy that. So I'm happy that you're telling me that premiums are dropping because they're dropping at the right time. So when the crowd does show up, what doesn't turn them off is, oh my God, I got to pay 40% above spot to buy a coin, 50% above spot. That was always the problem with rare coins, that you had just such a high markup going in and going out. It kept it from ever coming, I think, a worthy marketplace. So I'm glad to hear that. Listen, the good news of what I've always said about the central banks buying, they're not buying it for a trade. Who are they going to end up trading this all to? I mean, they're buying it because it's going to be used for something more than just, hey, look, our thing is going up. Now, you're going to hear this talk. This is how the crypto market, the negative about the crypto market, they have the world's greatest snake oil salesman that ever worked on the earth as their lead spokesperson. I'll say it. I don't care what he says or reads this or hears it. This guy, Saylor, could truly sell snow to the Eskimos. And the next thing that they're going to push, because they've tried a lot of things. Remember a few years ago, crypto's going to replace money usage. Everybody's going to be, you can go anywhere. The technology never allowed that from day one at all. Now, there's other coins that I think will work, but I don't think Bitcoin will be the answer. Then now the latest or the fifth birth of the greatest thing for why you got to own it is a reserve currency. And it's going to need to replace gold. And one of the pitches they're going to make is, hey, look how much gold has gone up now. The United States will just sell their gold now and own Bitcoin. Okay, let's just say they did that. Okay, then so after they're done and they own Bitcoin, what's left to keep Bitcoin going up? There's no intrinsic value to it. There's nothing else you could use it for. You can argue gold is used industrial-wise, so forth, especially silver and all. So I suspect that that'll be their next ploy. And we heard it. Remember, you were in the business. It was just a few years ago when they said Bitcoin's the new gold, or digital gold, they like to still call it and all. So what's happened? Gold's gone from under 2,000, almost up 50% since then. And it's doing that for reasons past. Poland isn't a world-renowned central banker, but it was interesting that they came out and made a public statement that they will never, ever have Bitcoin as a reserve currency. El Salvador, which just remember, a year or so ago, that was the big selling point of the Bitcoin people. Oh, look at this, the country's there. That's what America needs to do. Well, they got rid of it. Basically, they had to get rid of it because the world, people with the money, the IMF and all said, if you do that, we can't help you. So It doesn't mean it's going to end tomorrow. And I'm a big believer in some of the other cryptocurrencies surviving and prospering after we had this inevitable sharp correction. But Bitcoin is not going to be the one. And it's just that this person and a few others who paid a lot of money to certain people to speak and talk about it and all have planted these thoughts in people's minds, but there's no substance behind it. And gold, the relic, and every other name that you've heard it called in these last few years has defied their expertise.
With record-breaking central bank purchases, escalating trade war tensions, persistent inflationary pressures, and soaring demand for physical delivery, the fundamental drivers for higher gold prices remain firmly in place. Whether gold surpasses $3,000 by the end of this month or shortly, the broader outlook for 2025 remains overwhelmingly bullish. As central banks, institutions, and retail investors accumulate gold, those seeking protection against economic uncertainty may find even more significant upside potential in the precious metal. Do you think gold will hit $3,000 before the end of the month, or will it take longer? Join the conversation. Share your thoughts in the comments, give us a thumbs up if you found value in this video, and subscribe to stay engaged with our community.